What is going on, guys, and welcome back to yet another video. If you are new to my channel, Ryan Pilon Money Coaching, my name is Ryan Pilon and I aspire to help you with managing your financial life and your overall personal development. I've learned that you only improve yourself even greater by actually helping others do the same. So here I am, and don't forget to hit the thumbs up, subscribe, and actually smash that notification bell so you could actually stick around for the journey. Now let's jump right into it and let's talk about how the rich get richer. I know, the rich stay invested. During turbulent times and when chaos strikes, normally the greatest opportunities for multiplying wealth actually appear. The rich ignore the fear and act boldly upon these situations, and they seize the opportunities that are presented. The rich use any tax benefits to their full advantage as well. When the rich have businesses, they have more tax advantages. Or when the rich stay invested, their money continues to compound, and when the money compounds but the investment isn't yet liquidated, the profits that earn more profits aren't actually taxed. So the rich seek knowledge and constant self-improvement. Inflation tends to also inflate asset prices, therefore increasing investment returns, which in turn outpaces inflation, so your money continues to appreciate rather than depreciate. Higher interest rates tend to affect more people and companies that have higher debt than people and companies with little to no debt. This in turn can create corrections in markets, which then presents great buying opportunities for the financially prepared people and companies for the long term. The rich are willing to make sacrifices and normally practice delayed gratification. For first generation wealth builders mostly, they are okay with living well below their means until they are in a great financial position of strength to afford the things they desire, rather than acting in impulse and acquiring large amounts of debt to obtain things right away. Now the same can go for real estate. For an example, in Canada, we've had skyrocketing, soaring real estate prices for years and years and years, and now even more than ever. But you could still overstretch your debts by acquiring properties very rapidly. For when interest rates actually start to skyrocket, then your payments will also skyrocket and home prices can decline by substantial amounts. The only reason I haven't touched real estate in Canada yet is because I only became more financially inclined right before the pandemic. And once the pandemic struck, I believe we are finally on the brink of a unique situation that may occur in our housing market. I could be wrong, but I generally am a bargain hunter, and I just don't like the speculative nature of Canadian real estate right now. So I stick with investing in stocks of great businesses. So think about it. If you had $1 million investment portfolio and that year you got a 15% return, that's $150,000 that was made without being taxed. And now you have 1.15 million, and say the next year you got 50% again on 1.15 million, which isn't very likely to be the same, but for the example's sake, that 15% follow-up on 1.15 million is 172.5 thousand without being taxed. Can you see the potential yet? The only thing stopping us is one, our fears to get started and the opinions of those closest to us that will disapprove of actions that are beyond their realm of behavior. Two, the motivation to get your quote-unquote snowball of wealth rolling. The first $100,000 is the hardest, but after that, compounding money takes a much more noticeable effect, and once our number gets into bigger amounts, it tends to also compound your motivation to keep it rolling, because you could see noticeable progress, and because you establish the second nature of your process. So three, our lack of knowledge. Once you make breakthroughs in your understanding of personal finance, it finally clicks and makes sense to you. And four, negative news and other psychological influence that actually impact your decision-making skills. All right, so thank you guys yet again for watching this video on how the rich get richer, and be sure to thumbs up, comment, and any questions you want, and don't forget to hit subscribe and hit that notification bell to keep up with my channel. Much love, guys, and I hope to see you stick around.